Hi everyone. Let's take a look at problem 16-1A, which is another statement of cash flow demonstration using the indirect method, which is the most common method used. And in this problem, we're asked to prepare a complete statement of cash flows. There's a lot of information, and let me slide down and I'll show you that in addition to what you see on the screen, there is also quite a bit of supplemental information as well. Now, rather than have me read all of these, why don't you pause the tape right now and read through the screen, and I'll come back in about 5 seconds and I'll page down so you can read through that as well. Okay, so why don't you pause it right now and read through the top part. Okay, assuming you've paused it long enough. If you haven't, go back a little bit and pause it so you can get through it. And now I'll page on down so you can see the bottom part of the problem. Right about there is fine. Now pause the demo so you can read through this. And then when you're done reading through it, press play and we'll begin the demo again. Okay, now that you've read through all the background information, and there's quite a bit to this problem, let me page up and we'll go ahead and put together this statement of cash flow, and we'll do it on another worksheet page within this spreadsheet. Okay, now I've just flipped to it and I've staged a lot of this problem for you. Okay, and I've done that because it will take quite a bit of time to do this from scratch. But we're dealing with the Kazam company. We're putting a statement of cash flow together for the year ended December 31st, 2005. And I see that I have a comma after the word ended. We don't need that. All right, net income, when we go back to this page, you can see it just to the left of where I'm moving the mouse, was $73,750. Okay, now we need to put together the adjustments to reconcile net income to net cash. And I really like to do depreciation first. So we need to see if we can find where depreciation expense is given. I know we've had some in this problem, and there it is, $18,750. Depreciation expense is a non-cash expense, so we need to add back that amount, and it's $18,750. So we've now put that piece of the puzzle together. Now, the next thing we do is we walk through every single account, making sure we've accounted for all the change, every single account within the working capital section of the balance sheet, which working capital is, as you might recall, is current assets less current liabilities. So let's take a look at accounts receivable. It began at $49,625 and it ended at $65,000. So to put that information together, we know if it began at $49,625 and ended at $65,000, that's an increase in accounts receivable. And if we're starting with net income and working to net cash provided by operations, then that means we've had an increase in AR, and an increase in AR means that more cash is tied up in accounts receivable, so we need to back that off. How about inventory? We see on the balance sheet inventory went from $252,500 to $273,750. So we have the same issue. We will take the $252,500 and we need to back off $273,750 to show that increase, which tied up more cash tied up more inventory in cash. So we have to again show that is a negative reduction when we're moving from net income to net cash provided by operating activities. How about prepaid expenses? We went from $6,250 to $5,375. Okay, that one dropped, which is good news in terms of cash, at least in a short-term basis. So we'll take that $6,250. We'll back off the $5,375, and we have an increase of $875. All right. Now that takes care of all of the current assets. Now let's move over and look at the other working capital portion, the current liabilities. we have accounts payable next, which was $116,625, and now it's dropped to $88,125. Well, if accounts payable have decreased, the assumption is that we've collected more of the money than what we had invested in accounts payable, or what others were willing to lend us through open accounts, and that means we've had an increase in cash for the period. I'm sorry, I've said that the wrong way. Let me look back again. We went from $116,000 and we reduced it to $88,125. That means since we had a decrease in accounts receivable, that represents a use of cash because there are less vendors allowing us open credit at the end of the year than there were at the beginning of the year. So what that means is we've had a necessary a need to invest more money in accounts payable for the year. So we'll enter that $88,125, back off the $116,625, and show a negative $28,500 decrease in cash. All right. What other piece of information goes in here? Well, within the text, they talk in Note A that there was a loss on a cash sale of equipment of $5,125. The details are in Note B. We sold the equipment for $46,875 with accumulated depreciation of $28,125, and we sold it for $13,625. All right, we're going to handle that sale of equipment somewhere else in the statement, in the cash flow statement. But in terms of generating the cash flow provided by operations, we know that that loss is in net income, but it doesn't represent cash flow. So that loss of $5,125 is much like depreciation, and we need to add that back. And once we do that, we've taken care of all of the items, I believe, that make up net cash provided by operating activities. One thing I see is that we haven't included net income in that calculation, and that's the correct number. Okay? Now let's move on down. We have a cash received from the sale of equipment. Let's figure that one out next. All right, let's go look at the problem again to find the cash received from the sale of equipment. All right, I talked a little bit before about notes A and B, and I realize I hadn't scrolled down so you could see the information. But there's the loss from the problem before, the line before we've just computed, the $5,125 loss on the sale of equipment. Okay, in Part B, they tell us that we sold the equipment for $46,875 with accumulated depreciation of $28,125, and we got $13,625 cash for it. In Part C, they also tell us that we purchased equipment for $96,375 by paying $25,000 cash and signing a long-term note payable for the balance. Now, with that information and the loss and the long-term assets, the equipment that you see, the $159,500 to the left of my mouse, moving up from $110,000, and the related accumulated depreciation, with all that, we should be able to calculate a few more lines, and we should also be able to reconcile to know whether we've accounted for the full dollar amount of that change. So let's do that. Okay, the cash received from the sale of the equipment was $13,625, and they gave that to us in the problem. They also said the cash paid for the equipment was $25,000. Okay, now again, I've done a little bit of work ahead. I've put together a small little schedule down below. Let's go take a look at that, where I've done just a quick reconciliation to make sure we've accounted for all the change. And again, I'll put this little reconciliation in a slight color so we know that that's not part of the formal statement. Okay, for both equipment and accumulated depreciation, I'm proving the balance. They gave us the beginning balance of $110,000. They tell us we had purchases of $96,375. We sold $46,875. If those are the only thing that happened to the equipment, then the ending balance should equal what they gave us in the problem, $159,500 And sure enough, it matches right there. So we've accounted for that correctly. Now let's take a look at the equipment. We started out at 110. Are we able to prove the 159,500? I'm sorry, we start off at 44,000 and we want to end up at 34,625. And if we've accounted for all of that, then we know we have all the transactions we need. So we start off at 44,000. Depreciation in the problem is $18,750. The amount sold was 28,125. Is the ending balance 34,625? It was, so we've done that part of the schedule correctly. Okay, I do see that I've got another typo right here I want to take care of. Oh, now I got the caps on. Let me get rid of that. Alright, so now we've taken care of the cash flow from the investing activities. We've proved the accounts that were being used, so we know we've accounted for all the cash flow for investing activities. Let's now move on down and work on the cash flow from financing activities. They've indicated that we borrowed cash on a short-term note of $3,750. Can we find that? There it is, note D. Borrowed $375 cash by signing a short-term note payable. We look at note payable and we need to make sure that that's the only change. We went from $6,250 to $10,000. We did, so that certainly is the amount of change. We'll go ahead and drop in that amount. Now let's take a look at the cash paid on the long-term note payable.